Welcome, everybody, to the Tuesday edition of the Not Your Average Investor Show. Today, we are talking to Tim Hix, who decided that he could invest in rental properties from all the way across the country, how he realized he could do that, what made him decide to buy a rental property before buying his own home, and what he sees happening in the economy that affects his outlook on this market. It's been quite the journey for you, Tim. And now you're on another part of the journey because you were officially live on Facebook for the Tuesday edition of the Not Your Average Investor Show. I am your host, Pablo Gonzalez. With me, as always, the man that I refer to as GC because he generates cash flow, because he's got genius concepts, and because he's a great co-host, and because his name happens to be Greg Cohen. Say hello, Greg.
Hello, everybody. Great to be with you.
Out of your mid-season form. And with us today, you just saw a little preview. Somebody that's been investing with JWB since before he had children, since before he had a family, since before he owned his own home. He lives out in the beautiful state of Oregon. He's out there at a national park right now, enjoying his life as a passive income investor. Tim Hix, welcome to the show, my friend.
Thanks. Really appreciate it. Excited to be here.
We're excited to have you, man. We're excited to pick your brain and all the stuff that you're doing and that you've learned on this journey. And we're excited to have the community in the house. We got Carl Thompson joining us from Colorado today. Nadeem, hello, everybody. Good to see you, Nadeem. John Henning, hello. Good afternoon. Leo, good morning from the West Coast alongside Tim. He's out in California. Luke DeJong, hello all. Marilyn Cotterman from Homosassa, Florida.
Home of the manatees.
Home of the manatees. Welcome, Marilyn Cotterman. Andrew Barnhill, who's becoming a regular on the show. Andrew, I see you, man. You're part of the community now. Lee Bishop, the OG community member, the MVP of the Not Your Average Investor Show. Bill Shields, hola, amigos. He's coming in with a new trademark name. I love it, Bill Shields. Hola to you, mi hermano. Jay Patel, hi, guys. Good to see you, Jay. And those of you that know, this show is a fan show. It's interactive. We want you chiming in. The two ways to do it is what y'all have already been doing, which is use this chat box, right? The one key to the chat box is that when you open up the chat, it's defaulted to only speak to the panelists. So only Greg, myself, and Tim see it. But if you want everybody else to chat alongside with you, just change the little button on the top from all panelists to all panelists and attendees, and you're good to go. For example, Nadeem Shah, who's closing on his first JWB rental property, he announced it in the show. So everybody get to go in there and congratulate you. If not, he would have only been saying it to us, and only we could say it. So congrats, Nadeem. Happy to officially have you on board.
Congrats,
and second, if you want to ask Tim or Greg a question, I have it up here now, right? We have this beautiful screen. This is the Q&A box where questions will stay directly in front of my face. I can't mess it up for you, and we'll get it answered. But without further ado, right now, star of the show, Tim Hix. Tim, you're joining us from Oregon. You were, I believe your story, when you first invested, you were living in, Jackson Hole, another beautiful part of the country. Tell us the origin story of how you started, thinking about wanting to be a rental property investor. You wanted to get into real estate. The market wasn't exactly right for you. Give us an origin story for it.
Yeah, absolutely. So I was living in Jackson Hole, Wyoming, and had been saving for a while, really living frugally and putting money aside every paycheck, saving everything I could. Real estate in Jackson Hole, Wyoming is insanely expensive, even when I was there several years ago. So I first moved there in 2010, and I was or 2008 really, and then I was just on the outskirts in 2008, moved into the town of Jackson in 2010. At that time, the lowest single family home was in the 700,000s, and I was early in my career, and so it was very far out of reach, and started looking at condos that had been built in the 60s, and they were still running in the 500,000s. And I did not have the career experience, the income, or the savings to swing any of it. But given the economy at the time, and so this is kind of still in the crash or post-crash, the economy was coming back, but housing was still lagging. I knew that I wanted to buy real estate. It just made sense. The simple buy low, sell high. It seemed to me that this was a buy low opportunity. And I was facing the realization that I wasn't going to be able to buy where I lived. And so It so happened that a really good friend of mine, Dan, he told me about these guys he knew in Jacksonville who were buying homes out of foreclosure, fixing them up, and then selling them to investors. And then they would run the property management as well. And so he told me this concept, and he I don't know if he was just like trying to be polite, but he didn't like introduce me or offer a connection right away or even tell me the name of the company. And so I start thinking about this and I'm like, man, this is a brilliant idea. I got to try to do something like this. And I start looking in my region, and I'm not finding it. I don't have the time to do it on my own. And two, it's like I've never done it before, so it would have sucked. I definitely couldn't have done it where I lived. I was looking at like homes 5 hours away, thinking, oh, maybe I could try to do this. And finally, I called Dan and like, hey, tell me more. and and Dan tells me about Jacksonville Wealth Builders, which is now JWB. And so started chatting. And at the time, I was so nervous because I had saved this money, and it was like my little nest egg that was going to be for my first house. And I had never owned a home before. So I definitely experienced analysis paralysis where I geeked out on spreadsheets super hard, went way too far on like, what if this happens? What if this happens? And eventually made the flight out to Jacksonville with my girlfriend at the time, who's now my wife. And we bought our first two homes that year in 2012.
I remember that. I remember all those conversations, man, early on. And you were just like everybody when they get started. But the difference was you were starting in 2012, where
Right.
this whole concept of doing turnkey rental property investing was so unique in 2012. Nobody had thought
Yes.
about it. There was really only like JWB and maybe one or two other companies, reputable companies out there that were doing this nationwide. And so, if there was ever a time to do your due diligence to make sure that things were soundly in place, it was that time. It's interesting to see now, right? And you're in the real estate field. So, can you give people maybe a perspective of what it was like to go down this journey in 2012 and how unknown it was versus today, where you even have home builders doing build to rent and getting into the
Right.
rental property game. You have huge Wall Street money coming in. Can you give people just a perspective of what it was like in 2012? You were almost a pioneer blazing a trail back then. Now it seems to be, a relatively common topic, especially in the real estate industry.
Yeah, I mean, it's become its own industry today, but back then it was for lack of a better word, terrifying. I was talking to people I trusted, like even my dad, and telling them, hey, I'm planning to put my money into a single family home in Jacksonville, Florida, which couldn't get much further away from where I was living. And that sounds like a terrible idea. You need to buy your own home first. And same with, I talked to businessmen who were older, had more experience than me, and if they had experience in real estate, they had just gotten burnt,
Right.
and they were not hot on real estate. And it was scary. It was scary. And at that time, nobody knew that the economy was gonna keep going full steam ahead for
Right.
8, 9, 10 years and still going. There was a lot of talk about another recession coming soon, which would have propelled home prices down further and who knows what. So yeah, it's definitely for someone who didn't live through it, then it's hard to almost describe other than it was definitely, it took a lot of faith almost to move forward and do it.
It is always a leap of faith to invest in a rental property that is
Yeah.
thousands of miles away. But you look back at those folks who bought in 2012, like you, Tim, and there were additional leaps of faith. I mean, people like to look back, we
Right.
do reporting on a monthly basis for all of our clients. And so we show, clients who purchased in 2012 and the purchase prices then, they were much lower than they are today. right?
Yes.
And everybody's like, wow, that was a no-brainer to buy in 2012. It wasn't a no-brainer. It was a much different type of leap of faith. And then the leap of faith today is different. But every time that you're going to invest in rental properties, you're probably going to have people in your social circle, at work, in your family saying, hey, what are you doing over there? That doesn't seem right. So I guess there's probably a lot of people on the call and on the show right now that are experiencing that. What was that moment for you where you just said, okay, I understand the concerns that everybody has, but I feel like this is right for my family? What eventually pushed you over the edge there?
Yeah, it was really, it came back to the spreadsheets, and I was like, this isn't gonna lie. I mean, even my most conservative analysis was showing this is gonna cash flow, and worst case scenario, someone else is gonna pay my mortgage.
Mhm.
Like that's not a bad investment by itself, even if I can break even. And of course, buying back then, the returns are unreal because the appreciation, rent
Oh, yeah.
appreciation, it's they've done phenomenal. And of course, in retrospect, oh man, it would have been great if I had bought more. But at the
Yeah.
time, it was like, oh, that was a lot of money. And
Yeah.
so I'm really happy. I guess for me, it was just kind of like, okay, these folks have their opinion and I'm going to have my own opinion, and it's going to be different. I'm going to go for it. And based on my analysis, my worst case scenario is actually pretty good.
Right.
That makes a lot of sense, Greg. So when you talk about the investment in rental properties, the way that JWB does it and why it's scalable, you speak a lot on Thursdays about this worst case scenario that Tim just brought up, like this worst case scenario of your bills are being paid and therefore it's a scalable thing to expand. Tim, you've grown your portfolio, right? Like that was, we're just talking about the first one. Can you talk us through the decision making in the ones that you've added? You're also really heady about investments in general. So kind of like, how have you paced your property acquisition versus diversification and looking into other things that you want to invest in?
Sure. So going back to 2012, I had saved roughly $50,000-$60,000 that I wanted to invest in real estate. And so with that, I was able to purchase 2 JWB homes, and those both closed in 2012. And then it took a little while to refuel the piggy bank. I was able to purchase another one in 2014, and then at that point, I was also able to purchase my own home for the first time. And so we were living in Jackson Hole still. It was 1,000 square foot condo that cost $500,000. It's crazy, but we wanted to stop paying rent on our own place and own our own home. So made that happen. And then
So can I just add something here just to kind of illustrate the point there of the difference in market values in Jacksonville versus Jackson Hole, especially in timing? I'm looking at your purchase prices for your 3 properties. The total purchase price for your 3 properties was about $315,000 for 3 rental properties in Jacksonville. And your first condo, I believe, was 1,000 square feet and it cost $500,000.
Correct.
There you go.
Yes. And so, yeah, what's most amazing is the rent in Jacksonville is, on par with higher priced homes. And so the math really works on those investments in Jacksonville. It's just wonderful. And then, yeah, I guess career took me out to Oregon. We've bought and sold a couple of homes on our own. And then now I've also have a rental property here in Oregon, 2 rental properties. One is a long-term rental, like the JWB homes. And then we also have a vacation rental, short-term rental as well.
Well, that's pretty awesome, man. You're just a real estate dude, right? You got the itch, right?
I do have the itch for sure.
A lot of people actually ask about like the short-term rental versus the long-term rental. Could you help people understand how that short-term rental made sense for you and out there, and maybe even the long-term rental out there versus the decisions you made with JWB?
Yeah, so I'll say working for a home builder helped influence my decision on on both of those investing locally because the company I work for built those for me. And so it added to the ability to make that happen. And I looked at the local market where I live in Bend, Oregon is likewise, it's overpriced compared to Jacksonville. And so I saw that as almost more of an equity play, almost an appreciation long term, more so than the cash flow side. I think Jacksonville certainly also has enormous upside in appreciation. But that was kind of my thought process. And then on the short-term rental side, where I live, they're limited by the city. So there's only permits. The way it works where I live, you can only get a permit if there's not already a permit within a 250-foot radius. And the lot that I identified had the opportunity to get the permit. And so I just kind of thought, given the scarcity of the permits, knowing that there's demand, I was able to do that, and it's been working well.
So a couple of things just jumped out to me. It seems like, people talk about diversification across asset classes, and I'm all for that. If that makes sense, if that's the best risk adjusted return for you, and if you're close to it, if you understand it, that makes sense. What people discount is just because you're in real estate doesn't mean that you can't diversify within real estate, right? You can diversify within types of rental properties that you're investing in. You can diversify between rental property investing, private lending, syndications. Those are all forms of diversification. So first thing that jumped out to me was just seeing how you diversify within rental property holdings, right? In Jacksonville, you've got your, call it risk adjusted returns that you're looking for, right? Meaning that you're cash flow positive and you also see a growth play. And then maybe for the one out in Oregon that you have, the long-term rental, you're just seeing you were able to get a sweetheart deal because of the builder that you work for. And then also looking at that and you're saying, listen, that's not going to be my cash flow, but I just think that there's going to be an insane amount of appreciation. So maybe that's a little bit more of your aggressive part of your rental property portfolio. Am I understanding that correctly?
Absolutely. That's a great way to put it.
Yep. And the other thing was you were talking about this limitation of permits. And I had never thought about this. Listen, in Jacksonville, we don't have a limitation of permits. We have a bottleneck of permits being put out by the building department, but there's no limitation. But I was just I'm taking golf lessons right now, and I was talking to my golf instructor, and he's actually going out to Jackson Hole, and he was talking about his living situation when he gets out there. And he was telling me that out in Jackson Hole, and I'm guessing in Bend, Oregon too, it's really limited. You can't build new construction. And I think it has to do something with just the amount of limited land so that we don't disrupt nature out there. And I'm probably fumbling all over this one, but can you talk to people about the limitation on permits? Because that is a huge advantage for being in a market like Jacksonville and it really affects housing prices being in Jacksonville, keeping them low versus, the high prices that you might see in Jackson Hole or in Bend.
Yeah, absolutely. And so to clarify, the permit that I was referring to was the short-term rental permit.
Oh, okay.
So you can only have a short-term rental or a short-term rental is not permitted if there's already one within a 250-foot radius. That still is quite limiting in terms of competition. But there's both a natural limitation on new homes, like in Jackson Hole. So you're bordered by national forest or national park where you can't grow. Pretty much everything that is developable has been. Really, the only way to go would be up, but there's height restrictions, and so that's created this situation where you've got insanely overpriced housing market, which is way out of whack with median income.
Right.
And so you're looking and you're like, oh man, yeah, I can go buy a home in Jacksonville, or try to fight a crowd in Jackson Hole or some other high price market.
Crazy to think of a market being fully developed. Like in Jacksonville, it's just not possible. You got hundreds of miles, hundreds of acres out there on the west side, which is really where one of our 4 key neighborhoods that's waiting to be built. We focus on infill lots that are just not developed. But in Jacksonville, it's just so far from what we see here in Jacksonville. Think about a market being fully developed.
Yeah, and Oregon struggles with a similar situation. So Oregon has a state law that requires it kind of forces density in a city. They have what's called an urban growth boundary, and it means that you can't subdivide lots outside of that boundary until you reach like a saturation point inside the boundary. So it would be like Jacksonville saying, nope, you can't go any farther west until everything is developed and built on the whole interior. And it also has the impact of creating artificially high prices because you can't just keep building the subdivisions. And so it's another hiccup in the housing structure that artificially causes prices higher than they could be.
How does that, Tim? So you are, I mean, you're the director of finance for a pretty big builder out there, right? So you're speaking about this stuff from a level of not just understanding as a rental property investor, but also as somebody that's out there making really big moves with big budgets and big decisions. How do these kind of like artificial boundaries, does that exaggerate your costs for construction and land development and the stuff that you're doing? And how do you see that based on how you follow kind of like costs and trends nationwide? How is that affecting the building market?
Sure. So we look at each market on its own. So land in Oregon is more expensive because if you're going to buy land in the urban growth boundary, you're going to pay more for it. And there's a whole like kind of secondary market of people making long-term bets on land just outside the urban growth boundary, but they don't know if it's going to be 5 years or 25 years until it expands. As a home builder, we don't play that game where we want to buy land where we can start building right away. And so we have to factor that in. And then, and we're also building in Washington and Idaho. And like in Idaho, it's much easier to acquire land. And so we're able to offer homes at a more affordable price point because the land is cost less.
That makes a lot of sense. What about, and what are you seeing in the materials world right now? We're hearing a lot about the cost of lumber, the cost of commodities. What are you seeing out there, and how is that informing A, how you're building, and B, how you're thinking about investing?
Yeah, it's pretty wild right now. The materials costs have been increasing dramatically over the last, really this year, 2021 has been insane. Last year, we experienced price increases in the second half of the year, but so far this year, I mean, it's substantial, and it's definitely impacted home pricing. So we've been able to pass on costs, but at some point, everybody's going to start hitting a ceiling where affordability becomes an issue.
You're absolutely right. I mean, this was something that we're going to talk about on the Thursday show for us when we go through the property of the week. But, I was just, and I'm going to put some numbers to it on the Thursday show, but our costs here at JWB for our construction year over year have gone up 20 to 30%, depending on the model from construction.
Yeah, we're seeing the same thing.
Yeah. I mean, crazy cost increases. And, when JWB is talking about vertical integration, we're talking about being an active participant in the revitalization of downtown Jacksonville. The reason that it should matter to everybody who's a member of the group or a client of JWB is because the thing that Tim just touched on, which is at some point, affordability becomes a limiting factor for your growth of your rental property investments, right? And we need to make sure that we're doing the things today for our downtown, for our community here in Jacksonville, to make sure that median incomes continue to rise, right? That's not a problem today in Jacksonville, but if we're going to be taking care of your money for 10 years, like we have for Tim, and 10 to 20 years over the next real estate cycle, that's a problem that's coming down the pike. And the good thing about Jacksonville is that affordability here is not an issue today. We're much more affordable than other markets in the country. But at some point, we need to make sure that we keep our eye on this. We need to be having an impact on it because it takes 5-10 years to bring talent into the community and to bring those jobs and to bring those Fortune 500 companies in the community. Because if not, you have a ceiling on your growth.
Yeah, that makes a lot of sense. So, Tim, when you are also an educated not just real estate, right? But you like to play the market. You like to keep up with the macro trends.
I
I know that. Yeah, you do. And I would love to get from your perspective, where are you seeing opportunities right now for investment for either long-term, short-term growth? Kind of like what things are piquing your interest right now?
Yeah. I try not to play the short term guessing game because I certainly cannot predict the market in the short term. But longer term, I'm really optimistic. I think that we have a pretty incredible setup right now with people have a lot of money in their pocket. The pandemic caused people to save and pay off debt. Plus they got some paychecks from the government, and all that is great for the economy. And then on top of that, we're seeing more companies hiring than there are matches from employees looking for that type of job. And so we're seeing wage growth, which again is going to be good for the economy. It kind of goes to Greg's point that if we can grow wages, then affordability is less of an issue. I think right now the wage growth is particularly in the entry level area, which is probably where it needed to be. And so I'm optimistic. I know that's not consensus. There's certainly people who are kind of concerned that we're reaching a peak. I don't see it that way. I'm much more bullish.
What do you guys see as far as housing prices? What are you guys predicting over the next few years?
Yeah, I'm predicting more stability. Like we can't keep rising at the pace that we have. And I think nationally is going to have to do the same thing. We're going to run out of buyers. You can't keep going at 8, 9, 10% for very long. So my hope is that we see some stability. Hopefully the interest rates remain stable. Federal Reserve's been very adamant about letting inflation do its thing for a little bit here coming out of the pandemic, saying it's going to be transitory. Assuming that they allow that to happen and mortgage rates remain low, I think that home prices can stabilize as opposed to decline, with probably continued modest price increases over the next few years.
Do you guys track months of inventory up there? Just curious,
We do.
Yeah. Can you give people an idea of maybe how many homes are on the market and how many homes sold recently, or just curious?
Sure. So in like our markets, I'd say maybe months of supply, months of inventory would typically be 3. And right now we're measuring it in terms of weeks instead of months because there's no resale inventory. In some of our markets, it's like there's a week of inventory, and in some it's 4. The senior guys on
Tell people
our
what that
team
means to see 4
Yeah,
weeks of inventory in a real estate market, right? What does that tell people about that?
sure. So to kind of explain it to someone who's never heard this term, months of supply is if today no new homes were listed on the market, given regular demand, how long would it take to sell all the homes that are currently on the market? And so normally about 3 months. Today, 4 weeks. So we're talking like 1 month. And what that means is that buyers have very few homes to choose from. Sellers have all the power basically. And it's created this situation where listing prices are going up and buyers are still paying over list. And there's bidding wars.
Yeah. And when you see such low months of inventory or months of supply, that would indicate higher than normal home price appreciation. Then the next question is, how long is that going to last? And then you start to think about affordability, right? So I guess in maybe in your maybe an average market for you, what would be the median home sales price for you guys?
So I'd say a year or so ago, let's call it 18 months ago, our median price might be around 350,000. And now we're up approaching 400,000.
400,000, right? To put it in perspective, last time I checked, the median home sales price across the country was about 360. I'm sure that's gone up a little bit, when you're going nationally, it's not going to go up as much as when you're in a specific market, but prices are rising. I mean, one thing that is a little bit different than our thoughts is that, you know, in Jacksonville, we expect higher than normal home price appreciation over the next few years. And we don't see it slowing down really this year for sure. Next year, we still feel like you're going to see higher than normal home price appreciation. But this is a really cool topic because, you know, there is no national real estate market, right? There are regional real estate markets, and Tim's an expert in his market. But one thing you should be looking at, if you're starting to think about where prices are going to go, is find out the months of inventory in your local market. In Tim's market, it's about, you know, 1 month to maybe 3 months, depending on it, right? So that's really low. But then also look at the median home sales price that he's working at, right? It's 400,000 now, right? That's starting to get less and less affordable for people. In Jacksonville, we're under 1 month of inventory right now. We're under 4 weeks of inventory, which is really low. Have never seen it this low. And our median home sales price is a lot lower, right? 285 is where we're at right now. So if both of those things are really low or as low as possible, you know, the common thought there would be you'd see higher than normal gains on appreciation for a longer period of time. And the opposite would be true. The higher you go for months of inventory and the higher you go for purchase prices.
So given all this, a couple of subjects I would like to explore here is seeing all this appreciation. Tim, you've been holding on for a long time. I know that you mentioned you've thought about cash out refinancing. Where are you? Where are you in that? Are you contemplating doing something like that? What would you do with that money? Kind of like what's holding you back from testing those waters? I'd love to pick your brain on where you're at with that.
Yeah, I plan to do I'm doing a refinance on my primary, and once I get through that, I plan to do a cash out refinance on at least 2, potentially all 3 of my JWB homes. Yeah, and I plan to reinvest that in additional JWB homes. So yeah, I think the Jacksonville market is, as Greg said, I think it's poised for additional appreciation. Obviously, the cash flow won't be the same as it was
right
when I bought 10 years ago, but that's okay. It doesn't mean it's not a good investment today. Greg, maybe you can speak to this a little bit. One of the things that we look at is migration from high level. My understanding is that Florida is experiencing incredible population growth compared to the rest of the country, and so that's one of the reasons that I think that Jacksonville, low price plus you've got population growth, it seems poised.
Yeah, absolutely. And this isn't a new phenomenon too. A lot of people will say, oh, well, this is just because of the pandemic, right? This is just because people are trying to get out of New York and, you know, have more space and where the state has opened up. I mean, that's really not the case here in Jacksonville, right? We were the 6th fastest growing MSA in 2018 out of the entire country. We were number 6. So it has been an established trend to move to Florida for sure, but specifically to Jacksonville because we are undervalued in comparison to the major markets in the state of Florida. Mm-hmm. And, you know, and everybody loves the no state income taxes. And we have a beach here, which Pablo and I go surfing in a lot of the time, right? And, you know, obviously the weather and all that good stuff. So people have been coming here, but you underscore a really important point, checking population growth, because at the core of this, that's demand. That's demand for renters. That's demand for owners of property. And like any business, you need to have, you want to make sure you got a steady stream of demand coming to whatever you're selling. So if you're an asset, you own assets and rental properties, you want to make sure that you're along that path of that demand. There has been a steady in-migration path coming into Jacksonville, Florida for a long time. And now it is just unbelievable. It really is. I mean, they haven't released the latest numbers reflecting the population growth since the pandemic. They just go off of, it's interesting. You know how they track until like the census comes out? You know how they track like in migration?
How's that?
They go to sites like U-Haul and they track to see how many in-market moves come from like, you know, U-Haul, which I love U-Haul. They're great, but I would have thought that like the government would have had like better, more recent data. But if you go and you look at all of the trends, like and then they also track now the number of people like on LinkedIn who changed their hometown to Jacksonville.
Interesting.
That's what they do now. That's the most like, you know, most current, I guess, in-migration data. And Jacksonville is at the top or near the top of all of them. And it's because people want to move to Florida. People also want to move to Texas. But if they go to Florida, they're looking for undervalued parts of Florida being in a major metro, and it's Jacksonville.
Yeah.
Right.
Mhm.
Lower prices than Miami, lower prices than Tampa, lower prices than Orlando. So it is things are booming right now.
Yeah, Tim, I was just kind of telling you earlier, and I was telling you about this, but I just went to this cryptocurrency conference in Orlando, right? So talking cryptocurrency and investing and blah, blah, blah. But everybody, because it was in Orlando, there was this dynamic of people coming in from Tampa, people coming in from Miami, because they just had a big event in Miami. And, you know, a couple of us from Jacksonville, a couple of people from Atlanta and out of state and whatnot. And the overall story is this giant mass, like net migration to Florida, right? And then as you dig deeper into the different conversations that we're having around this net migration, is the idea that, yeah, everything is, people are all coming into town. I don't know where that's coming in from. People are coming into town. And actually, you know what, Greg? You're getting somebody is calling you on your Facebook. And we're live on Facebook. So somebody's trying to call Greg. All right, we got it. We got that figured out. But we got this mass net migration into Florida. And everybody else that was talking about it from, you know, Miami was ridiculously expensive. That's one of the reasons I moved up here. And now it's just like phenomenally ridiculously expensive. Orlando and Tampa have already kind of like reached that saturation point where they're doing that. And the deal is the small towns in Florida and Jacksonville, right? But like, where do you want to be there, right? Like, do you want to be in this like small town that's experiencing this like special moment, or a metro area that has all like the dynamics for growth that are balanced with this like logistics economy and government economy and healthcare and fintech and whatnot? So it was a really interesting experience to have that conversation now in mass. Number one, I was happy to be in public. But number two, just this, after having spent the last year and a half here in sitting on the seat and being able to have this conversation, like having this educated conversation of like, what is the average price point? What are you seeing? Like, what is the guttural feeling, right? Like, are you feeling like Tim felt in Jackson Hole and thinking that it was totally overpriced? I always bring it back to the comparison of, you know, you show up to Vegas and you might want to bring $500 to have a good time with. And if you sit down at the $500 table in the Bellagio, you make one bad bet, your fun's over. Whereas you can go sit at the $10 table and have a blast for 5 hours and get a couple free cocktails,
Right.
you know, and it's real, man. Like, it's the mass migration of Florida is real. The opportunity is real, and the upside in Jacksonville seemed more tangible to me than ever, especially this weekend.
And the cool thing is, let's take this conversation of how people have been coming to Florida and to Jacksonville at a higher rate pre-pandemic, and let's equate that to what this means for you as a real estate investor, as a rental property investor in Jacksonville, right? In terms of home price appreciation, right? Jacksonville's home price appreciation rate for the last 30 years has outpaced the national average. National average is 3.6%. And Jacksonville's home price appreciation has been 4.3% on average year over year over those same years. Well, why does that happen? It's because what Tim's talking about and what Pablo's talking about. It's because there's more demand for housing here because there's more population moving here, right? If you want to see the markets where home prices have gone up the most, it's those markets where population has grown the most. And then if you think about it right now, where, you know, it's accelerating, right? We're talking about a mass migration to Florida, specifically into Jacksonville, because it's undervalued, it's underpriced. What does that mean for home price appreciation for you? Well, in the short run, we expect higher than normal home price appreciation because we see this mass migration being one of the big factors as why people are moving here. And then long term, the best thing about rental property investing is you don't have to time the market, right? Tim, you did an excellent job of timing the market in 2012 and in 2015, but you're still jumping in again here with this cash out refinance, and you're going to come back into the market right now. And it's not like you missed the opportunity, right? You're coming back, you're going to buy more. And it's because it's time in the market is the most important thing, right? You make decisions over the long haul, Tim, just like you've been talking about, because, you know, I don't really care about what home prices do this year and next year in terms of my long-term growth plan for my rental properties, because long-term, I'm going to go back to that same idea of what real estate cycles tend to do. they tend to repeat themselves. And knowing that Jacksonville's long-term growth on average each year has been higher than the national average, it's probably going to be that same approach over the next real estate cycle. So it's a beautiful thing to be in a place where people are moving. And right now with interest rates being like they are, I guess, Tim, I'd love to hear kind of the thought process. I didn't know that you were thinking about doing the cash out refinance until we jumped on the call today, and that you're thinking about investing additional JWB properties. But I got to tell you, man, we talked about your purchase prices for your first 3 right off the bat. You know, geez, it was about 315,000 for 3 back in the day. Now, you know, that'll get you like 1 and 1.5 properties for JWB. So talk to people about why that still makes sense for you.
Sure. I think to a certain extent, the price you pay, it's one of many factors. It's not the only factor. And it all has to be relative to what other opportunities are there, what's the rent, and what's the potential for, you know, rent to go down. I see the idea of rent declines as very remote, given what we're just talking about, population growth. I know there's more building going on, but it's not gonna drive rent prices down, in my opinion. I think there's just too much demand coming into Jacksonville. And so I look at it as an opportunity to get more properties at a fair price today. I think long-term that price is going to go up, but if it doesn't, that's okay too. If I can let somebody else pay down my mortgage, I'm in.
Yeah. I mean, that's a great way to think about it. And every time you're thinking about putting your money towards something, you're comparing it to the alternatives, right? This idea of looking back and saying, geez, I would have loved to buy more in 2012 is nice to say, but that doesn't help us make the best decision that we can today, right?
That's right.
You know, you're looking at what your other alternatives are, and there really aren't other alternatives out there without barriers to entry that you can get in where you earn, where it pays for itself every single month, right? You've got income coming in every single month. You typically don't get that in the stock market.
Right.
In bonds, it's a paltry amount, right? And then you've got it paying for itself, but you've got these other profit centers. And the biggest one is home price appreciation, which if you combine smart debt and home price appreciation going up, I mean, the returns that you can earn in rental properties are quite astounding. So it's like you get this risk mitigation factor that you don't get in many other investments out there. And you combine it with significant upside. And the key here is you only have to be in for the long haul, right? You got to choose the right team. You got to choose the right market. But if you do that, in order to be able to get risk mitigation with high upside, you have to be in for a full market cycle. And so, Tim, I mean, you're saying it, you know, exactly right. Like, yeah, I would have loved to have bought more 9 years ago for those same purchase prices, but it's not a reality, right? And if I compare where I can put my money today versus what those other alternatives are, rental properties is what is on the minds of people more today than I have ever seen in my 15 years of doing this. Like, that is the solution, which is nice because it's always been my solution, but now people see it.
That being said, you're right? Like, you're seeing Wall Street Journal articles about how this is the rental property economy and you know, the hedging against inflation and all the things that we see coming. Tim, have you looked at other investments to compare to versus other rental properties? Have you made that kind of like diagnosis recently?
Not recently. I have over time. I mean, there's certainly alternative investments that, you know, I guess that you can invest in the stock market, right? And that's not a bad investment. And I still max out my 401k, and it's 100% in the stock market. And I think that's a good long-term investment. But if I want to retire early, that's not the way to do it, because I can't produce income from it, or I'm depleting my capital base if I'm pulling money out at the 4% a year rule. And so I see cash flowing real estate as the opportunity to retire early, because it's going to produce cash before the traditional retirement asset.
Beautiful. Yeah, that makes perfect sense.
Awesome.
Yeah.
I feel like in my head, as I'm hearing this, I'm like, there's a future show just on that concept right there. Right. And showing people why that makes so much sense.
Yeah, that makes a lot of sense. I literally wrote, I see cash flowing real estate as the opportunity to retire early. That'll be a quote card that we're going to attribute to Tim. So you're going to get a little package for that one that you can post wherever you'd like. We've got a couple questions here from the group. If we can just dive into it, they're not really Tim specific. Some are not Tim specific, but I think we can just get into it. Raj's Bantu has been waiting patiently. He has this question. I'm in the process of closing my second property. Lender asked for a copy of a lease. I was told by my property manager that JWB is not going to give tenant names and contact details. What's the reason for that? And he'd like to refinance some properties, and lenders will ask for copies of full lease. Greg, do you know what's going on there?
Yeah, I mean, that's a confidentiality thing. We're not able to release the name of your tenant and some of those confidential details. And this really isn't an issue for anything having to do with your lender. Yeah, absolutely are going to be able to give them all the information that they need to make sure that you can get the loan that you need. But we're just not able to do that from confidentiality reasons.
Okay, makes sense. Nadeem Shah, who today is closing on his first JWB property.
Well, congrats.
Yeah, welcome to the fam, Nadeem. When you get to see your investor portal, you're gonna feel real special, man. Like, I'll never forget that moment. But he asked, when there is a shortage of home inventory, what does that do for rental property? Does the rent go up? Maybe Tim, can you answer that from your perspective of what you've experienced and what you're seeing in Oregon, and then Greg can eliminate?
Yeah, it's supply and demand. And so when there's a shortage of supply, the rental population is essentially the same or growing if you've got a population growing, and landlords recognize that there's not enough homes for rent, and so prices tend to creep up. It's really as simple as supply and demand. If you look back to the Great Recession, when there were so many empty homes, rents declined a lot because there was excess supply. And I think today on the resale market, there's such little supply, and that's also equating to a lack of supply of available rental inventory. And so, yes, take it a step further. Institutional investors are all over this. As Greg mentioned, build for rent has become an asset category for big Wall Street money. And so they're seeing this supply demand out of whack.
Yeah. And let's just talk about that, right? For decades, all builders did was build houses to sell to owner occupants. And over the last couple of years, builders have changed their business model because they see such an opportunity to get into rental property investing. Like it takes a big shift for the big national home builders to make that shift. They need to see a huge potential profit opportunity. You guys can go and do Google searches. You'll see this. Some of the biggest builders out there are now holding on to these assets and renting them out. I mean, that is, I just never thought that was going to happen, right? We started to do build to rent back in 2011 was our first venture into build to rent. And the numbers just made so much sense there that you could buy the properties for so low, right? You could build them for so low because building was pretty much non-existent at that point. So that should really communicate to people that the big bucks out there see a huge opportunity. And Nadeem, it's a great question about rent rates going up. Again, we talk about being in the path of the path of progress or whatever those cliches are, right? Going with the stream, right? When you own housing right now, you are in the driver's seat, just like Tim was talking about earlier. Whether you are trying to sell that asset or like us, you're trying to hold on to it for a long time. When there is significant demand coming to you and coming to this, for people wanting to rent the home, you're going to see home rent prices go up. So last week I was researching, we subscribe to John Burns Real Estate Consulting, which is something we pay a little bit of money every single month for to basically be up to date on all the national trends. And what they do is they break out all the rent price growth among other stats for all the different regions. And of course they put Jacksonville in there, and Jacksonville's rents were up 8.8%. I mean, that's significant. Normally your rents and your home prices are largely going to be tied to inflation. So, 3%, 4% is usually where you see home prices and rents going up. So 8.8%, according to John Burns, is really incredible. And it just kind of underscores Nadeem's question, Tim's point here, what we have been talking about, that, we're poised for rent growth. We're poised for home price appreciation, specifically because of supply and demand, and because in Jacksonville, we're still affordable.
Yep. All right. We got one last question here. Jay Patel asks, what are your thoughts on Orlando newly built properties? Tim, have you, in your analysis, do you look at other places in Florida? Have you considered it, or are you just so happy with the JW experience and you like Jacksonville? Like, what is your thinking on buying your next home with JWB versus Florida real estate property rental homes?
Sure. I've just developed a deep level of trust with JWB, and so I'm not really considering other markets in Florida. I've got so much faith in JWB treating me right that I'm not familiar with the Orlando new home market.
Makes sense. Greg, you're from Jamlando. What do you think of investing in Orlando, man?
Well, first, just want to say thanks, Tim. That means a lot. And at the core of it, if we do a good job building trust, then we get to enjoy these wonderful working relationships for decades now. So appreciate you putting your trust in us. That's what it's all about, man. The deal with Orlando is, to me, I'm gonna like investments where they are going to put me in a great position to get risk-adjusted growth. And the first thing for me for risk-adjusted is, does it have positive cash flow? And when you're in the Orlando market, you're seeing home prices were already too high pre-pandemic to largely get positive cash flow in a decent below middle income neighborhood, right? You may be able to get it, but you probably, I'm not going to collect your rent in those neighborhoods, right? You'd have to go to the low income neighborhoods. You want in that sweet spot. So pre-pandemic, Orlando was sort of too high to be able to get the positive cash flow. And if you can't get positive cash flow, you're just taking on more risk. Again, the reason that's so important, and we talk about this often on the third show, is that, like Tim, his long-term plan has to do with building up financial freedom, early retirement, and rental income properties are our way to do that. In order to accomplish a big goal like that, you're going to need to put more than one property in your portfolio. Tim's got 3 and he's thinking about adding more, right? So the reason why positive cash flow for me is so important, it's not because the extra $100 a month are going to change my life or Tim's life or Pablo's life or your life, but it allows me to think about putting 5 in my portfolio or 10 in my portfolio and to not have to go negative every single time. So that's why cash flow is so important. You're probably not going to find that in Orlando. And it's even worse today as home prices have, of course, gone up like they have across the country as well. Orlando has gone up. More rare for you to be able to find a positive cash flow opportunity in Orlando. Jay, I'm hearing that a lot of investors or those that are selling turnkey rental properties are actually going outside of Orlando because they can't find the pricing to be able to justify positive cash flow. So you'll hear of places like Ocala or other places, which is not Orlando. It's, for me, I want to be in a place that has, at least 1 million residents. Orlando checks that box, but Jacksonville checks that box. But Ocala, I don't know what the numbers are, but I can tell you, I just drove to Ocala, probably a month ago to go play golf. And I passed a lot of horses, but I didn't pass a lot of homes or businesses. So,
horses don't pay rent.
horses cost a lot. They don't
ask them for rent.
They don't pay rent. So, that would concern me if you start to go to some of the outskirts and, and then I would look at employers. I would look at some of those things like, even if you're able to get into Orlando and you can make the cash flow work, as we have seen, Orlando's economic base is very different than Jacksonville's economic base, right? Their tourism is largely
hospitality.
Yeah, hospitality and tourism. I would prefer to be in an economic base. The military is our number one employer, 3 Fortune 500 companies, shipping, logistics, those healthcare. Those are the types of an economy that I want to be in. So those would be some of the things that jump out to me. But I don't think Orlando fares nearly as well as Jacksonville in that regard there.
This was awesome, guys. We knocked out the questions. Tim, you were great. We got great reviews so far coming into the chat. Jennifer fills in saying that her fingers are going crazy with her having to type so many great notes on what you're saying. Lee agrees. He says you're hitting it and doing a great job today. Tons of great value out here. Tim, I don't know. Are you part of our Facebook group, Tim?
I am not on Facebook.
You're not on Facebook. Well, listen, if somebody wants to connect with you or they want to learn more about Hayden Homes and what you're doing, is there a good way to connect with you? LinkedIn maybe?
LinkedIn is probably the best spot. Feel free to reach out to me there.
Super, man. All right. So we'll link that in the show notes and
Okay.
we'll direct people that way. But thanks a million for joining us. And this has been a really great illuminating conversation of just the different real estate dynamics from somebody that has such a great perspective on it inside your own market and how every market is different, right, Greg? Putting that part into it was really eye-opening for me. I really want to thank everybody that joined us. We've had 45 plus people on the show so far. That is a testament to you, Tim, because the number kept increasing as we kept on talking. People were tuning in. So somebody was telling their friends to show up. And you never lose sight of the fact that people take an hour out of a Tuesday afternoon to join us on the show. That can only happen when you're providing such great value. Greg, you're providing such great insight. So it's an amazing thing to be a part of. Thursdays, we do this again. We go to, we do the JWB rental income property of the week, where we're going to dive into a specific property, goes into X's and O's. If you want to get in on this asset class, the move is to just go to chatwithjwb.com, pick out a time to talk to our team, and you can ask them all these questions and find out how it fits for you, whether you live 3,000 miles away or you live in Miami, like I used to live in Miami, and you want to invest somewhere, or you live in Jacksonville, right? Like, now you're investing here. But this has been a lot of fun. Greg, I'll kind of leave it up to you to say goodbyes and thank Tim and wrap it up.
Thank you, everybody, for being a part of the show. Super fun, super incredible to see the group growing. And so thank you all for taking an hour. And Tim, I mean, I just want to say that it's been awesome to reconnect with you. It'd been way too many years since we last chatted. Super happy for your family, for your two boys there that are growing, and your success at your role at Hayden Homes, and your success with your rental property portfolio. I think you just hit the nail on the head when you talked about trust, man. That's what we care about. That's absolutely what we care about. So it just feels really good to know that we've done right by you and that you feel that trust, because that's what it's all about. Thanks for taking your time to be here. I know you're a busy guy. And with that family, with that career, it's awesome for you to spend a few minutes with us, and looking forward to catching up with you here soon. We're not going to let 5 or 6 years go by next time.
That sounds good. I appreciate it. It's been fun.
All right. See you, Tim.
All right, everybody. We'll see you on the next one.
Bye.